All right, let's cover this quick one final time. I've seen countless posts on Twitter, people saying that AMC is about to run here, $7.50, $10. I've even seen some $20 price targets, which are completely delusional to what's happening in the fractal sequence right now. SPY has ran right up to the 707 at 438, right into FOMC. CNBC is saying that, oh, well, the market's expecting a pause on rate hikes. So Powell doesn't like to spook the markets, right? Might as well pause, Powell. Not going to happen. He's going to hike 25 BPS, 0.25 BPS, because we're way overextended here. Way overextended. And AMC, while SPY has been just roaring higher every single day, has not moved whatsoever. It is still in this $1 range. So I firmly believe my thesis stands. It is the same move that happened April 4th with the after hours court news that axed us. What was it? 23%, right? On the daily, and then after it was, I think it was 364 where the bottom was. It was 28%, right? So they are rerunning this fractal over again. You got to remember that AMC tracks the S&P 500. The S&P 500, SPY, the ETF, usually tops when AMC tops, right? It also, at these like moments like of conjunction, like any crucial moment where AMC is about to either end an older fractal or begin a new one, or bottom in between, is when SPY has these significant news release dates. They line these up on purpose. It's on a timer. It's not organic supply and demand, okay? Whatever computer is running these algorithms run both at the same time. It controls both SPY, AMC, Tesla, whatever, right? It coordinates their news movements and their swings all together. The whole system is, like if you look at a stock like Tesla, right, where you have the options chain gamma loaded completely, and Tesla makes some ridiculous squeeze move because it's an institution's baby stock, and that's where they like to park their big money. It works to the opposite with AMC. Usually when it runs, the option chain is completely dry, right? Next week's options chain is completely dry. So I am not showing you guys the way I have this sequenced. I will unfortunately never show you guys that. I can't tell you everything and how I figured this out. But I am telling you right now, after FOMC today, there should be some bad news release on AMC, causing one ape to make a significant move to the upside. And let me pull up that chart really quick so you guys can see. Right, this would be roughly a 20% move, okay? And it would top at this VRVP level, which is stuck here, right? Sticking out at $1.93. And then as ape makes its move, AMC is going to get completely axed. So then, in order for that to happen, the news has to be something bad for AMC, but good for ape, in some way, shape, or form. The news has to be revolving around that because the charts are set up to diverge right now. If we look at AMC's chart really quick, if I am right about this, okay, and they axe this thing after FOMC, the news can come in after hours just like it did last time. It can be a 20 to 23% drop, which would fill this entire gap right here. It would end you at, $3.96 or $4, but I like $3.96 a lot because psychologically, that's technically breaking structure, right? And they would do it in after hours, so you wouldn't see it on the daily chart, just like they did here. It makes perfect sense. It makes perfect sense. SPY is overextended here. Powell comes in. He raises interest rates, 0.25. They axe AMC with some bad news, 23% after hours. 8 makes a run, 19%, right? Tops at that VRVP level of the $1.93. AMC gets crushed down to the $4 level, fills the gap completely. And then we make our move right off the bottom Thursday. That'll be your last buying opportunity. And we blast Friday, up 20%. Now, if this bottoms on Thursday, the top should be by the end of next week. So I'm talking like the June 22nd, maybe the morning of the 23rd. But that's it. It's going to be a 4-day move. It's going to be 50%. And that first move Friday is going to be roughly 20 to 25%. And like we talked about the max pain in the beginning of the week, I told you guys 501 to 549 is your max pain. Looking at the options chain with the open interest on the calls and puts, everything is quite literally lined up for this to happen. I understand people say things like you can't predict what's going to happen with the fractal. You can't predict what's going to happen with the news. I completely disagree. I have been measuring this thing, and I have been incredibly accurate 70+% of the time. And the more I fail, the more I learn, the better I get. And we're in a point right now where the timing, the narrative, it's just a crunch. And there's only so many things it can do. It's either one, we get this dipstick and rip like I've been talking about now for a week or 2 weeks, or two, we run from here. And then you top by, next Tuesday, which is, Juneteenth is Monday, we're off. So it's one of the two. I mean, I'm both long and short, right? I'm short the stock on weekly expiration because those are going to 10x if we drop to $4 overnight. And I'm long into June 23rd next week. So this is a great spot. No one should be like afraid, upset, anything like that. We're going to get a run here. We are absolutely going to get a run here. It just depends on how it plays out. And I know AMC, and you guys have watched it for 2-3 years straight. How many times has the stock done what everyone's expected it to do? It's forming on the micro, the smaller time frame, a nice accumulation pattern here. Wouldn't it just be so nice for it to go like, oh yeah, awesome, right? Like, no, that's not what's going to happen. All right. Use your brain, understand how, diabolical this algorithm is. It does everything it can to fake out both the bulls and the bears. What a better fake out it would be to break structure, right? Or whatever. Take it to 396 right here, right here below, right? During after hours, and then rip it off the bottom. It would catch everyone completely off guard. You'd have the people saying, oh my God, it's $3. It's going to, whatever. It's going to 280. It would completely destroy both sides. That's my thesis. That's how I see it happening. I will revisit this video on Friday, but the drop, this would be micro distribution. And for people that don't really understand what distribution is, right? Here's your UTAD, and then just bang, just an absolute drop to finish distribution, and then you continue the macro accumulation. This is accumulation, but on a larger time frame, right? It's not distribution on a larger time frame, not yet, at least. But this is accumulation pattern, regardless of these big swings back and forth. You get it, and inside of bigger accumulation patterns are smaller accumulation patterns, are smaller distribution patterns, and within those are smaller accumulation patterns and smaller distribution patterns. It's a smaller shrinking iteration within a larger version, and that's what I believe we're experiencing here. I want this drop, dipstick, right? Thursday's your last buy opportunity. We rip off the bottom, 410, whatever it is. You fill that gap. You scare the shit out of everyone by breaking structure and after hours. It's a 23% drop, and then you rip to 620 by next Thursday. It's that simple. I mean, those contracts are going to go absolutely ballistic. So, the VIX is 14. So, listen, guys, this is it. It's what I've been talking about for 2 weeks. This is what I want to see. If you have any questions, ping me in the chat. I will read. If we start running past 520, that is your key level to say that, all right, we're probably just going to break and go. We start running past 520 today, right? Powell comes out, pauses rate hikes. Let's play devil's advocate. Does exactly what everyone's expecting. AMC explodes from here. You're going to get your top by most likely next Tuesday. It's going to be fast. It's going to be fast. So that's the opposite scenario. I still think dipstick and rip. You guys got any questions? You know where to find me.